les gens, mais les gens avancent. N'est-ce pas le parrain Max C'était? Le retour en force de Jeff Bobo, le bango premier. Ça va se sentir. Totoruno El Samouraï, le roi de Zamunda. Laissez tomber à faire la suite. Le magnifique. Sylvanie, soit mon alunayo, soit mon alunayo, soit Hena Buga, Hena Buga, Hena Buga, Hena Buga, Buga, Hena température. Le bon colonex, Sarah Touré, Océane Communication. Alaji.
You're listening to WGHC 98.3 FM.
But we are nothing friend from see the first time. Want to trust in skin. You know me why you get anything you like. Long as you are right, then me alright. Me know your man, that's why I'm alive.
Your voice, your music.
Whether me in a skirt or jeans or short shorts, head raised when me walk past. Me feel the eyes, believe the eye. Me love the lights, me tweet the pipe.
Say like you all I got to all baby, pana. Anywhere that you go, I can follow you to go, baby. You level.
You're listening to WGHC 98.3 FM.
New level. I them turn Tony in a rebel.
Your voice, your music, your station. WGHC 98.3 FM.
All right, thank you all for tuning in to WGHC 98.3 FM, your voice, music, your station. My name is Jeff Badu, and I'm a licensed certified public accountant. I'm a wealth multiplier and a serial entrepreneur, and I'm the CEO and founder of Badu Enterprises, which is a multinational conglomerate in the financial industry. We do a host of services, including tax preparation, planning, representation, and all your financial needs, essentially. Today we have a very special guest who's actually a part of the mission, a part of the brand, a part of everything that we do, Mr. Cortlon Cofield.
Hey, Jeff. Thanks for having me today, man.
Yes, sir. Not a problem. So we'll be introducing Cortlon in a minute. Today we'll be talking very, very special topic. Cortlon is a close friend of mine as well as a business partner. So we'll be talking about business owner retirement planning, some different tools you can use as a business owner to really save for the future and get your future going as far as when it comes to retirement savings. And then secondly, we'll also be talking about entrepreneurship. So really, Cortlon will share his journey as an entrepreneur. I'll share my journey a little bit. But I want this to be very engaging. If you have any questions, we are streaming live on Facebook, so you can find me live on Facebook. You can search me, Jeff Badu, on Facebook. You can also search Cortlon Cofield on Facebook. And if you do want to call into the studio, you can always call in at 773-942-7167. Once again, 773-942-7167. You can call in, or you can also post on our Facebook Live. And then, of course, as usual, we'll be sharing our contact information and all that good stuff. So before we start, let's get into the market report. So this report is as of February 22nd, 2019. So essentially, the benchmark indexes posted modest gains last week. We've actually haven't had a down week so far this year, which is pretty impressive. But ultimately, we were led by the small caps of the Russell 2000 with another weekly gain. The Dow has enjoyed its longest streak in almost 25 years. I mean, are you kidding me? Volatility was moderate last week as the CBOE Volatility Index hit its lowest level in several months. Long-term bond prices moved very little as yields have remained fairly stable for much of this year. And then also for the year, investors have been bullish on small cap stocks, pushing the Russell 2000 to an almost 18% gain over its 2018 closing value. That is quite impressive. The NASDAQ is next, followed by the large caps of the Dow and the S&P 500. Even the global Dow is 10% ahead of its last year's closing mark. Oil prices rose from $55.80 per barrel to $57.16 per barrel. And the price of COMEX gold essentially went up $13.24.60 to $13.30.20. So overall, across the board, everything went up so far this year. Now, you have to pay very close attention to these numbers. Dow Jones is up 11.59% so far this year. NASDAQ is up 13.45%. S&P 500 is up 11.40%. Russell 2000, 17.91%. Global Dow is up 10.02%. Federal funds rate currently at 2.25% to 2.5%. So interest rates are, continuously going up, although the Federal Reserve has showed signs of slowing down a little bit this year because last year we had a pretty scary year in the market. But overall, we're doing really well, for those who need some motivation to become investors or just to participate in the market. These are the type of returns you can see. Although it's not likely, these are, this is quite impressive right here. And I know Cortlon will be talking about that in a few. But now let's really get into the presentation. Retirement planning for business owners or retirement presentation, retirement. We're really talking this year. This year our goal is to really focus on saving for the future. And one way to do so is through different retirement accounts. I'm a huge proponent when it comes to this. As a matter of fact, usually when I advise my clients, I usually tell them to ultimately save through retirement. That way you have protection, and there's a lot of benefits that come along with that. But let me introduce the speaker. So Cofield is a certified public accountant and a personal financial specialist, and is the CEO of Cofield Advisors, which is a financial planning firm that specializes in serving entrepreneurs. Cofield is also a professional financial literacy educator. He teaches financial literacy to a myriad of audiences from grammar school all the way to corporate employees. Cortlon is also a U of I graduate. We actually went to school together.
Yes, sir.
And sat on the National Association of Black Accountants UIUC chapter together. So we go a long way. He started his entrepreneurship journey I believe, last year or a few years ago?
2 years ago, man.
Exactly. So, and I know he's been enjoying it. So with that being said, definitely thank you for coming in, Cortlon. It's always an honor and a blessing to be able to get some insight from industry experts such as yourself. So my audiences, on behalf of my viewers, on behalf of the station, we thank you for coming out. And let's get right into it.
Yeah, man. Appreciate you asking me to come here. It's crazy, meeting at U of I campus. We never knew, a couple of years down the line we will both own our own businesses, and I'll be doing great work in the community. But it just shows a testament to the hard work. But yeah, man, I'm excited to be here. Let's help the people save some money, man.
Yeah, absolutely. So we'll really be talking about, the theme of today is really about business owner retirement planning, retirement savings, saving for the future. I think that's the better terminology. So how to prepare yourself for the future. The average American does not save money, unfortunately, when it comes to this. So, I guess can you just share just a quick thing when it comes to, just a quick blurb when it comes to retirement savings? What are some different options out there? Like, what are some things that business owners can do to really save for retirement?
Well, let's take a step back, right? Let's understand the power that business owners now have in their hands. So, conventional wisdom, as an employee, the framework goes: you get paid right? And then they take taxes out of your paycheck, and then you get whatever's left to spend, right? And Jeff, you know the average American pays about 40% in taxes. As a business owner, you kind of shift that framework from getting paid, them taking out taxes and you getting what's left, to you're now getting paid, spending whatever's needed to run your business, reinvesting into your business, reinvesting into yourself, and then paying taxes on what's left. So it actually allows you to reshift the framework and give you as a business owner power over how much taxes you pay. So it's a great position to be in as a business owner because you have a lot of flexibility. Now with that flexibility comes a lot of responsibility, right? Because you have to know what you're doing. So with that being said, retirement plans, self-employed retirement plans are ways in which business owners can put money away for the future, right? Since you don't have an employer, you don't have a traditional 401k plan, but that doesn't mean that you can't set one up for yourself. So that's where self-employed retirement accounts come in.
Cool. All right, so that's good to know. So what would you say, let's get into a little bit about the nuances of saving for retirement. So you have pre-tax and then you have after-tax. So what would you say is one of the best ways, if you had the choice between the two, for let's say your average business owner, which one would you say is the better one?
Well, so pre-tax is traditional. Post-tax is Roth, whether that's 401k, IRA. And I think me and Jeff both agree on that. Taking a Roth option is the best option to take for a few reasons. One being that your tax rate now is usually going to be lower than your tax rate in the future. And secondly, we don't know what the tax rate in the future is going to be. So I always tell my clients, like, I'd rather fight the enemy I know today than the enemy I don't know 30, 40 years from now, right?
That sounds like a Bible verse, by the way.
For sure. So it's just Roth, taking advantage of the Roth option allows you to pay taxes now and never pay taxes on the gains in the future. So it's a huge work in your favor. Okay,
cool. So can you just briefly go over, so to my understanding, I know there's SEP IRA, there's a 401k. So what would you say, if you can just quickly break down the different types of retirement options and maybe go a little into the traditional versus Roth option as well?
Yeah, for sure. So the self-employed retirement accounts, there are a few that business owners have to choose from, right? So you have your SEP IRA, which is your self-employed pension IRA. That is a basis, and you can put up to 25 to 25% of your net income. So SEP IRA is one. Solo 401k is another. So you have your own self-employed 401k plan. Then we have what's called a simple, and a simple retirement plan is for, I guess I can go over this in detail a little bit later, but a simple retirement plan is for people that have less than 100 employees. And then on top of all that, you have what's called a self-employed pension. Actually, so like a SEP IRA is something different. The self-employed pension allows you to put up to $300,000 away. It depends on how much revenue you got. So you have these four different types of plans, and as a business owner, you need to know which one is best for you.
Absolutely. That's a good point. So what would you say, when is the best time to start saving for retirement as a business owner?
Yesterday.
I like that answer. Yeah, so why is it so important to save? Why is it so important to save for retirement?
Yeah, that's a great question. So, let's talk about it from the face of it first, right? Mm-hmm. I tell my business owner clients this: every dollar you put away into your self-employed retirement account, you save on average about 30% of that in taxes. Mm-hmm. So, if you put down $1,000, you save about $300. If you put in $10,000, you save about $3,000. If you put in $100,000, you save about $30,000 in taxes. So, the first part of it is that every dollar you put away, you get a tax savings on. So, at some point, it becomes, who would you rather get this money to, your future self or the government?
Exactly.
Right. So that's one point. And then the second point is just, how you talked about at the beginning of the show, how important investing is, right, at an early age. So if you're able to take advantage of these self-employed retirement accounts, you'll be able to make money while you're not working and put yourself in a great position for the future.
Exactly. And this chimes into the next question. So what is compound interest? People hear this fancy term. What is the most powerful force on the universe? This thing called compound interest. What is that exactly?
So like you said, Albert Einstein actually said compound interest is the the most powerful force in the universe, and I agree with that, because compound interest could turn $1,000 today into hundreds of thousands of dollars in the future. So I like to tell speak on this one part about compound interest. If you put away $300 a month, I think it's for 35 years. That $300 a month, it turned into $1.2 million.
Wow, just like that, huh?
So you put away $3,600 a year, and your total investment, I think, is a little under $200,000, and your compound interest accumulates to other $900,000.
So why does it happen that way though? Like, what's this force? Like, what exactly makes it like that? Why does money accumulate that fast?
Well, compound interest is interest on interest, so it's an exponential formula that doubles, triples, quadruples, your money over time, and
Exactly.
It's very important because it's only 24 hours in a day. If you can make money while you're sleeping, then you're gonna have a superior advantage.
Absolutely, I definitely agree with that. So would you say that the average business owner can save more for retirement than an average like W-2 employee?
100%. 100%.
Oh, yeah.
The average business owner can definitely save more than the average employee. We can put some numbers to it, if you don't mind, Jeff.
Absolutely, let's do it.
So in 2019, I believe the max for a solo 401k is $60,000, right? So as a business owner, you can put away $60,000 for yourself away per year using the solo 401k. Now, if you were an employee, the max you could put away is $19,000.
Exactly.
And you gotta hope your employer matches, right? 50%, 25%, or anything, right? If you have an employer that doesn't match, you only can put away $19,000 as an employee, and the self-employed business owner can put away $60,000. Y'all can make the same amount of money.
Exactly.
He can just put away almost triple or more than triple amount you can away for his future self.
That's powerful. That is really. So if I'm an Uber driver, can I save for retirement?
Absolutely.
Oh yeah.
Absolutely.
Like
and
that.
Jeff, the tax guy, I'm pretty sure you speak on this to your audience all the time, man. Like, if you're 1099, you're self-employed. That's a fact.
And Tax Cuts and Jobs Act, Creating Jobs Act. I think that should have been the name of it. It's the Creating Jobs Act, because the tax reform really, truly benefits those who create the jobs. There's a reason why they took away all deductions for W-2 employees, but they still kept pretty much everything except for entertainment expenses for business owners. As a matter of fact, they even added a new 20% deduction for business owners, including Uber drivers, freelancers, Grubhub, and traditional business owners, those who truly start businesses like myself and Cortlon. I think that as a business owner, you should always be striving to save for retirement. Now, is it true that if I, let's say that I'm out driving and, not to say you should do this, but let's say I had a few drinks and then somehow I ran over somebody. I have $1 million in my retirement account. I don't have anything in my savings account. Somebody sues me for $1 million. Can they take that $1 million from my retirement account?
No, sir. Retirement accounts are restricted assets from any court cases. So, again, if you're negligent in any way and hurting somebody, they can't touch your retirement assets, which is, why I always harp to my clients on asset protection, right? Because we don't want an unfortunate situation where you get sued and somebody literally takes all the money that you worked for over your lifetime, right? So
exactly. And is it true that O.J. Simpson basically did the same thing?
Yeah, O.J. Simpson, and I think Mitt Romney actually had a multi-million-dollar Roth IRA.
That's exactly how Mitt Romney invests, is through his Roth IRA.
Yeah, he invests in businesses through his Roth IRA.
Exactly.
He had a multi-million-dollar
and
IRA.
a lot of people don't even know that to this day, is that you can actually, is it true that you can actually self-direct your IRA? You can buy things like real estate, Super Bowl tickets for resale, businesses, you can invest in all these different vehicles. Is that true?
Yeah, so this is something I really have to harp to my clients on, because people are uncomfortable with what they don't know, right, Jeff? If you don't know something, you're scared to go down that avenue. So most people don't understand the stock market, so they don't want to invest because they don't understand it. And I tell my clients, like, when we set up these retirement accounts, we don't have to invest in the stock market.
Exactly.
Right? If you're a real estate professional, then we're going to use this IRA to turn into a self-directed IRA. You can buy more property. You can stick to investing in what you know. I don't care what you invest in, but we have to shelter this money from taxes.
Exactly. Okay. Now we do have, once again, thank you all for tuning in to WGHC 98.3 FM, your voice and music, your station. This is Money Talks, where all we talk is money. And if you do have any questions, please feel free to post it in our Facebook Live. We're streaming live right now on Facebook. You can post questions. Find me at Jeff Badu on Facebook. And you can also find Cortlon Cofield on Facebook. Now, we do have a guest who asked a question, Miss Anna Murphy, who's also on the team. She's a celebrity bookkeeper
Yes,
on
sir.
the team. She is one fabulous bookkeeper. Shout out to Anna Murphy from Murphy and Associates. She said, how about divorce? Like, what happens with retirement assets when it comes to divorce?
They're not affected. To my knowledge, as long as your money is put away in a, and I have some clients that unfortunately went through this. If you're in a divorce, your assets are safe, and if your assets are in liquid bank accounts, they are not safe. I had a few clients that went through a divorce and lost a substantial portion of their money, and if they had met me early, we'd have that money in retirement accounts, and that wouldn't have happened. Yeah,
So is it true that it's cheaper to keep her, especially with the new tax reform?
Depends on how much money you have, right? It depends on how much money you have to lose. If you can get all that money to the retirement account, man, you might be okay getting rid of her if you don't like her. But no. And Jeff, I want to take a step back to something you said very, very that was very, very important. Is the tax code, in your opinion, is the tax code made for W-2 employees?
Oh no, not at all. The tax code was only created. The only reason why the tax code was created really was to benefit two people, and only two people only. Those who create jobs or business owners, and those who own real estate and provide housing to people. Yeah. So I would say as a W-2 employee, I mean, literally the tax code just slaughtered. I mean, not that people actually save money from tax reform, but the true winners are the businesses out there, especially the big ones like Apple. I mean, Amazon recently just came out, $11.2 billion, zero taxes. Can you imagine?
Crazy. And
the average American pays 40%. Amazon pays 0%.
Yeah.
Take that with a grain of salt.
Yeah. So to just point that tax code. I tell my clients all the time. The tax code is made for investors and business owners. If you're not either one of the two, you can't benefit from it. So become one of the two. Right.
Exactly.
It's that simple.
Exactly. Now, I'm glad we're transitioning pretty smooth today. What was the reason why you became an entrepreneur? Like, what was that burning desire that just made you say, "Hey, I'm tired of working. I'm tired of being a W-2 employee. Let me go out and start my own business"? What would you say were some of the reasons?
You want to know what's a crazy reason? And I don't think I've ever told you this before, but when I was still working at the hedge fund I was at, I came over your house a few times, and I used to ask you, like, bro, what you doing tomorrow? And you'd be like, whatever, I don't know, whatever I feel like it. And I was just like, dude, you get to wake up and do whatever you want to do every day? Like, yeah, bro.
Every single day.
And I don't know, so what really made me do it is just wanting to have control over my life, right? Wanting to be able to, build income, build revenue, build wealth on my terms. And the book, which I know you've read, Rich Dad, Poor Dad.
Oh, yeah, number one.
The number one book I tell anybody that I meet to read. They ask me a book recommendation because it really takes you out of the employee mindset and puts you into the entrepreneur mindset. So to answer your question, man, I just want to control over my life, my money, and the way things worked, and not to mention, the tax savings, right?
Oh man.
I think at my job I was paying around close to $18,000 in taxes a year, 18 to 20, and now I've got that money back because I can take advantage of the tax code in a way where I can pay the minimum tax liability necessary.
Exactly. That is awesome, man. That is awesome. I mean, for those tuning in, entrepreneurship is very important, especially if you live in America. The tax code, once again, was created for those who create jobs and for those who invest. Those are the two people that the tax code really benefits. Not to say that you shouldn't work or anything like that, but if you truly want wealth, true wealth, you have to look at the taxes. 40%, can you imagine 40% of your budget going towards taxes? Money that you don't even get to see first. The government gets to see it first, and then you get to see it. But as a business owner, you see your money first. You spend it, do whatever you want, go on your business trips or, annual board meetings and all that good stuff. Take your meals. We can't do entertainment, but we always could do business gifts and advertising and all that fun stuff. You take all of those, and then if there's anything left, you pay it towards taxes. And what companies like Amazon do is once they make the profits, they reinvest it back into the business, or they buy things like real estate. Amazon just acquired Whole Foods last year, for example. Different tax credits. Them hiring, they raise minimum wage, hiring certain types of people. All of those things create tax incentives. So you have people like Jeff Bezos who are pretty much just kicking back, relaxing, saying, wow, these, and it's not, and for those that are mad, angry, don't get angry,
Join them.
Exactly right.
Join them,
That's what it is. If you trust me, if you knew how to not pay taxes, you would not be paying taxes.
For sure.
I guarantee you that. That's for sure. So you shouldn't really necessarily be mad or angry hearing, oh, Bezos, the rich are taking all the money, all this and that. I mean, why not get into that category? Why not start a business? Everybody has some sort of urge in them to start a business. I know for a fact. For me, one of the reasons why I got into business was I heard about all the beautiful tax incentives there were. Anytime I'm going on a trip, as long as I'm working 4 hours during the workday, I get to write it off as a business expense. Or I can have my annual board of director meeting. For example, we, quote unquote, are having our annual board of director meeting in Jamaica this year. So, these are the different.
Free. You want to go?
Exactly. So these are the different incentives as a business owner that we get to take advantage of. The average W-2 employee can't see a penny of that back in taxes because there's no business reason behind it. But when you're a business owner, every single time you do something, it's an opportunity to grow your business. It's an opportunity to attract clients, an opportunity to grow revenue. I mean, for example, I went to Ghana last year, as a trip. And, it was my annual trip, essentially. I went to Ghana, and somehow, some way, I came across a piece of real estate. And we're in the process of acquiring it right now, and that makes it a justified business trip. So everything I did in Ghana was essentially tax deductible because it now has a business reason behind it. And I got to, essentially acquire a piece of land that I'm about to build a 6-story building on in order to build and generate revenue. Now, every time I go to Ghana, that becomes an automatic tax deduction because now I'm visiting my building,
Yeah, I mean, Jeff, you hit on so many great points. I don't even know where to start. But so I'll start here. It's like as you mentioned, it's like as a business owner, you have these loopholes, you have these things you can do. And one of the things that, I know you advise and I advise my clients to do as well is, if you like real estate, buy a piece of real estate in a place you love to visit.
Yeah.
If you love to go to Vegas, well, buy property in Vegas. You can write the whole trip.
Exactly.
Right? It's like, buy property in places that you love to visit. So, Jeff, I really want to ask you this question. I think this is very important because you hit on it a little bit earlier. How do you feel about people? We all have hobbies, right?
Oh yeah.
Right. How do you feel about people monetizing their hobbies? Right. Turn them into the hobbies and the side businesses.
I mean, I think you should absolutely do it. That's what I did, and not to be the nerd or the geek on the show, but I love doing taxes. I can do taxes in my sleep. I mean, I loved it. I used to actually do taxes. I know Cortlon thought I was crazy for this. I used to do taxes for free for like 5 straight years.
That's just crazy. Still as crazy as it is to me now as when you first told me that.
Exactly. So, and that was a hobby. A hobby is something that you love doing that you don't mind not getting paid for, or you basically don't even want the money, that you're willing to do it for free. So for me, it was taxes. I was like, I was working at PwC, and I was grinding the quote unquote 9 to 5, which doesn't exist at a big 4 public accounting firm. Man, that's for sure.
9 to 9.
9 to 9. Sometimes 9 to midnight. Yep. Sometimes 9 to 2 a.m. But with that being said, I was doing taxes on the side after work. Had family members, friends, a lot of different people that trusted me in order to do the taxes. I did it for free, and then I turned that hobby into a business. So the first year I started my firm, we came in with 100 clients, and these were the clients that I built over time that I was doing taxes for free. And they didn't mind paying because they were paying anyway, in the past. So with that, I turned my hobby into an actual business, and now that hobby has turned into a company, a multinational company
exactly
that operates in all 50 states in the U.S. right now, in 4 countries, has about 20 people essentially on staff or 20 people on the team, targeting 2,000 clients this year, just a hobby that turned into an actual business. And then also another hobby was the car rental business.
Oh yeah. Which
Cortlon and I, we actually do a venture together with that. But, one day I was driving Uber, and this is after I quit my full-time job back in September 2016. I was driving Uber, and tax season was coming, and I was like, there's no way I'm going to be driving Uber and doing taxes when the taxes can make me more money than an Uber.
Exactly.
So I took the car that I had, posted it on a platform known as Hire Car, which I don't use anymore. But I posted on a site called Hire Car, and somebody booked the car for a month. They paid me $1,000 for a whole month. I was like, wow, why don't I have 13 more cars?
And then you went and got
Exactly. Went and got 13 more cars, and now it's a pretty big company. We do a lot of stuff. We're acquiring more cars. You know, we're acquiring our first ultra luxury car this year, and we plan to tap into more of the luxury market. So that was a hobby. Basically, it was a hobby because it wasn't something serious. It's not necessarily that I would do it for free, but it was just something I was just doing just for fun, and it turned into an actual business. You know, an actual business. So I would say, when it comes to hobbies, and certain, you know, it doesn't have to be this extreme of a hobby. It could be singing. You know, I have some clients, a client, for example, who plays the cello, as she was doing it as a hobby. Now she turned into an actual business. You know, I have a client who was playing a guitar. Now he turned into an actual business.
There you go.
So you should certainly turn your hobbies into businesses. You know, if you like baking cakes, if you like styling for people, if you like whatever you like doing, if you like taking pictures. I currently manage Instagram models, and they're making a serious killing just taking pictures.
10,000 a post these days.
Oh, yeah.
Man.
Editing videos. That was a hobby. I mean, I know for a fact they would do that for free.
Right.
And they're getting paid to take pictures on Instagram. And I manage these people, you know. So with that, you should certainly turn your hobbies into businesses, because now you create that tax shelter that allows you to shelter your expenses into these vehicles. Now, always important. Now, 2 weeks from now, we'll have an asset protection session with my one of my closest business partners, Donald Kielbasa, who's a CPA attorney. He'll come in. We'll be talking about asset protection. But when it comes to entities, you absolutely have to make sure you get these things in place. LLC, limited liability company, S corporation, C corporation, which I usually don't recommend for small businesses. But always make sure you're set up right, even before, because all it takes is that one bad cake, that one bad lemonade. If somebody sues you and they said you poisoned them with lemonade, guess what? You lose everything, because they're going to sue you, let's say, for $1 million, and all your assets, let's say, are in savings accounts. But if it's a retirement account, they don't get they don't get anything. You know, the only thing they might take is the lemonade that they already got poisoned.
Yeah, and to, you know, to kind of round this all about, I just want to encourage people that, you know, starting a side business or a side hustle and turning into a business is just a great idea for so many reasons. But one of the main things that Jeff didn't hit on, I'm hit on now, is you get to turn your already personal expenses into business expenses. And this is where it becomes huge, right? Your cell phone bill that you use anyway, you can write off. Your home office that you're going to use anyway, the internet that you're going to use anyway, the car that you're going to use anyway, the money that you're going to spend on the trip anyway, right? You're spending this money in the first place. So businesses allow you to use that money that was going to be spent on a personal level and change it to a business level. My goal when working with anybody is to turn all their personal expenses into business expenses, because now that 40% you're paying in taxes, you can put that money back in your pocket and you still living the same life.
Yeah, you're creating instant cash flow just like that. You're getting a 40% or so return on investment just by becoming a business. You know, perfect example. I had a client who was working at a financial services company, and he came to me for his taxes. He was like, man, I'm tired of getting screwed. I'm tired of paying taxes. They're only sending me W-2s, and I don't receive 1099s or anything like that.
1099 status.
Oh, yeah. 1099 is beautiful, especially when you're getting a new 20% deduction on your 1099 income, as opposed to a W-2 who doesn't get that. But he came to me and he said, basically, he wants to save money on taxes. You know, he was making about $60,000 a year. And he was paying about, let's say, $15,000 in taxes.
That's about right.
So he was making that, and when he received the results, he was like, "Man, I'm getting killed. What can I do?" But I was like, "Well, why not change yourself into a business?" And you're literally doing the same thing. Mm-hmm. You're living the same lifestyle, you know, but you're just tracking better. Why not turn your W-2 or your employee life into a business owner 1099 life? You know, I just finished his taxes today, you know, and basically what happened with him is that he actually left his company because his original company didn't allow him to get a W-2, a 1099. So he moved to another company that allowed him a 1099. He formed an LLC, shielded all his income through his LLC, and he dropped his $15,000 tax bill to $1,000, creating a $14,000 increase in cash flow.
$14,000 more dollars for doing the same thing.
Literally, he's doing the same thing, working with the same clients. He's saving 14, and that's not just one time too.
That's per year.
He's going to be saving this for the rest of his life.
Exactly.
As long as he's doing this. So that's the difference between, you know, a W-2 employee, somebody who's making $60,000 on a W-2 side, who gets to write off literally nothing. The best they can do is get a 401k, a health savings account, you know, a deferred compensation plan. You know, there's a lot of different things. But for this man, he literally wrote off everything. He bought a new car, which, of course, he did, you know, all business related. He gets an $18,000 depreciation. So instant $18,000 write-off. You know, of course, he uses the car for business. It's not luxurious. It's not lavish. It's just a nice car. Now, if he wanted to, he can throw this car on a site called Turo, get some rental income off that car, and still get the tax benefits of that car. So now he's creating an $18,000 cash flow, you know, $18,000 tax shelter, which turns into cash flow, you know. And what he's allowed to do is now he also, all his trips, for example, the trips he takes, now he gets to shield them as business expenses. The meals that he has, I mean, he literally took out every client that he could. And in the financial services industry, building relationships is everything.
That's the goal. Networking is the goal. You can spend as much money as it takes on networking. So, Jeff, you're telling me your advice saved this client $14,000 per year. So let's say over 10 years, $140,000. And people say don't hire a tax specialist. Man,
$14,000 just 1 year. Just 1 year. Instant cash flow, time value of money, that calculation. And just like Cortland was stating, you said what, $3,600 a year for the next, 30 years or so?
$3,600 a year for 40 years is $1.2 million.
$1.2 million. Now imagine this guy is getting $14,000 a year.
If he would invest all that, I can pull it up on a computer, but it would be an astronomical amount of money over time.
And that's how we create cash flow. That's what money is about. That's how we save money on taxes. We have to find ways to really shield our money through businesses. You know, that's how true wealth is created. All these billionaires, Bill Gates, Jeff Bezos, Warren Buffett, his effective tax rate is 17%.
Jesus.
The average American is 40%. He pays less taxes as a percentage than his own assistant.
$68.2 billion paying less taxes than the average
American.
Making $40,000, $50,000.
Exactly. And sometimes we complain about being broke. We complain about not having enough money to feed our families. Well, the one thing that I would highly encourage you to do today, if you don't have one, is to create a budget. And on that budget, please make sure you put after-tax income. Not before tax, but after-tax income, and see what that number is, and see if it doesn't encourage you to be a business owner. Now, I'm not saying quit your jobs tomorrow. You know, that's not what we're promoting on this show. What I am saying is if you can find a way to turn your job or your W-2 into a 1099 or a business, instant tax savings, you create cash flow, you create more money for your family. You also build a multi-generational wealth because you can pass this business down to your dependents, to your child. You're creating that cash flow. And one of my biggest advice here, if you have a spouse, make sure that your spouse is also an owner of your company, or you guys have a business together, because every time you go on meals, quote, or aka dates, that becomes an instant tax write-off.
Say the business name and it's a tax write-off.
Because of the fact that you both are business partners. And the rule with business meals is you have to discuss business either before, during, or after the meal. And I know me personally, anytime I go out with a friend or I'm having.
Every time we go out.
Exactly. Every time we go out, we're always talking. At some point in the conversation, we're talking business.
Exactly.
So if you have a spouse and you're a business owner, you should absolutely include your spouse in the business, because that creates that instant tax shelter, allowing you to write off your business meals. And then you're allowed to hire your child and create another instant cash flow. Let's say you have a 7-year-old, 8-year-old, they're not doing anything. Well, if you're making, if feasible, you can hire this child, and you can ultimately create an instant tax write-off, because what you can do is you can hire that child, pay them a salary, no more than $12,000, because at that point you don't pay any self-employment taxes for that income, and that child you get to deduct that $12,000 on your taxes, creating an instant cash flow. So the name of the game in life, or in America, is cash flow. Cash flow is king. if you don't use cash flow to work for you, it shall work against you. And when you multiply that with compound interest, that's when you really understand when it comes to money.
I mean, I couldn't have closed the segment with a better, with a better quote than that. But the one thing I try to live by is make the key to wealth is making more money while you're sleeping. You can spend while you're awake, man. So and that only comes through investments, through passive income. So you need to find out ways to make money while you're not physically working. So you can,
exactly.
Find you.
Yeah, and that's a good point too, Cortlon. I mean, I'm glad you mentioned that. Because the reason why is it's very important. The best type of money to make is money that you don't even have to wake up for. You don't even have to be alive. Michael Jackson, as we speak, is making millions of dollars right now, and he's not even alive. So what's your excuse? Take that with a grain of salt. So Michael Jackson is making money right now while he's not alive. The reason why is because he has so much passive income that comes in. He's going to have passive income coming in for the next 1,000 years probably. Mainly because of one song and one song only. The song is called Thriller. Thriller makes so much money. I mean, it is literally it's like literally one of the number one dance move of all time. The moonwalk and all that good stuff. So when it comes to money, I would say the best type of money is passive income. So after you started your business and after you started making some money, at least consider reinvest in that into something like real estate. Imagine you started your business, you're starting to hit the 6-figure number, and now you're starting to shelter that money into real estate. You buy one property, let's just say every 2 years. Your work life is, let's just say, the next 30 years. So that's 15 properties. 15 properties, multifamily units. And let's just say, to keep the number simple, they're 3 flats. So that's 45 units paying you rent every single month. Every unit makes you $1,000 net. Let's just say $1,000 net. Of course, things can happen. Tenants can, slip and fall and all that. But $45,000 a month that you don't even have to work for. And then, of course, and that's net, by the way. So that's after all your expenses. Imagine running your business and receiving $45,000 in income simultaneously. And on that $45,000, guess what? You don't really pay any taxes on it because of the big fancy D word called depreciation. So when you couple wealth building, passive income investing, passive rentals and all that good stuff with active income, that is a very, very powerful combination. With that being said, any final words, Cortlon?
No, man, this is a great segment, and I really hope we encourage people to take a chance on themselves and start businesses, even if it's just a side hobby. Start somewhere, man, and you can save a lot of money early.
Exactly. We definitely thank you. Thank you for your contributions, Cortlon. I think it was fabulous. We truly appreciate you sharing your insight. I think our viewers gain a lot of insight. Remember, as a recap, when it comes to taxes or when it comes to wealth building, a business owner and an investor will always outweigh the tax savings of a W-2 employee or somebody who just doesn't invest. So with that being said, thank you all for tuning in to WJC 98.3 FM, your voice, your music, your station. Once again, my name is Jeff Badu. I look forward to continuously delivering you all some content. Next week, very important, I'm actually teaching a class. Next week, I'm teaching an entrepreneurship session at the Chicago Urban League. I do that 3 times a semester. So I won't actually be here next week, but we will the following week. We certainly will be here with Donald Kielbasa, who's a CPA attorney, my close business partner. This strategy, he loves what I'm talking about to you today. He loves, and he talks about the real estate and asset protection case. So definitely thank you all for tuning in once again. My name is Jeff Badu, and I look forward to continuously delivering you all some content. Thank you.
You're listening to WGHC 98.3 FM.
Spoil you, but we are nothing friend. From see the first time, want to trust instant. Gonna me spoil you, get anything you like. Long as you are right, then me alright. Me know you're mad, that's why I'm alive.